So while that comes out, I mean, many of you know we did the ALS Ice Bucket Challenge. My son, little sneakily, not only did we all do it, but then he challenged his mother to do it, Mary. And I'm glad it was him and not me, but you got to see this one. They ganged up and got not one, but 2 buckets dumped on Mary. Her own son threw her under the bus. It is the most hysterical. It was, I'm just so glad it wasn't me. Of course, our son can do no wrong, but that was a little, that was interesting there. Oh, Eugenio, your bucket video, did you get done over the weekend? Did you guys do it at your family? We had, thanks to you guys, we also, I don't know if we're going to start it to a tradition here, but we had the grandkids, everyone over yesterday, and that's how we decided that it was Sunday, the day we would do it, and so everyone got in it. Oh, good. Family, I bet that was fun. Now you got to go and donate the money too, so it's a 2-part deal. So, any event, all good for a great cause and enjoyment of life. It was pretty interesting. All right, so we'll start off with what we typically do. The market here is on a test. Obviously, the Russell way behind the yearly highs. The NASDAQ, truthfully, even though the market is rallying, we're, again, the volume can catch up in price, but as we've been saying, in the short term, this thing in this type of environment where performance is being chased and it's very, very light volume, what goes up can continue to go up, but over time, prices have a hard time of sustaining that bullish momentum. But in the short term, highly leveraged instruments betting that the market's going to go down can be very costly. That's why last week I started to initiate very lightly at Friday and earlier last week, just a few handful or so of the Q96 October puts, and I'll be more disciplined and watch as we progress towards the closes on a daily basis. As we press up in the market here, we're getting a little over extended. Everyone probably realizes that, and there's some neat things that happen from a seasonal perspective with some of the pharmaceutical as well as the biotech, which has been helping to actually press this market higher. So as well as some of the technology and now retail. But I wanted to go through a couple little things with you, especially I was really surprised to check this out, and I'm going to change this over here to the relative strength. We're going to start there. Or try to. Here we go. Okay, so looking at the daily McClellan oscillator, we got from 175. The market, it's really bizarre because the market's traded up and the McClellan oscillator has gone down. So that's kind of an interesting anomaly there. When we change this over to the weekly, we note that, by the way, for many of you that are summer mentoring, we got a zero line recheck, the market went up, and now we've broken the zero line. To me, that's really a, what's the word I'm looking for? Not very positive. So I'm very much on guard, but the mark, so basically it looks like from an overall market, we need to kind of follow this McClellan oscillator and the advanced decline analysis real close this week. And then if the market is going to plunge, or fail from these highs, because of the light volume and light liquidity, it could be one of those really fast, furious overnight actions. I think the market today is excited because there is no new hindrances of the market to move up and no new hindrances for the S&Ps to hit their 2,000 mark. So they can get rid of those hats they bought at the NYSE. Any event. What I see for this week, that was number one. I'd start off with the daily positive thought. The book titled Think and Grow Rich never said sit down and think to get rich. It takes thought to be put into action. but many times it also takes the action of discipline to know when not to take action as well. That's very important, especially in this day and age. You know, to sit there and to initiate new positions up here, I think I'd just let this thing go and expand as it starts to get maybe a short squeeze, a technical issue. Two things happen on a short squeeze. People that are chasing performance need to buy, or those who are short need to buy to get out because they're losing too much money. But in any event, 3 of 4 stock indices are near person's pivot monthly targeted resistance. The ES, the NQ, and the YM are all near monthly pivot resistance. The advanced decline combined with our volume analysis suggests a pause is in order up here. The bond spread, the knobs have widened significantly, suggesting the long end of the yield curve is outperforming the 10-year notes. So the high in this spread could be challenged near 117, or excuse me, just 17.30 seconds. That would be a big move, but maybe it's like 15.5. I don't know. We got to look this over, and I'll stay with you on this one in just a second to show you the charts. The fact we had the financials last week, specifically bank stocks, the regional sector KRE was up 3% in 1 week last week. So that means for year to date, it's only down 3.5% or 3.65%. That's right. The regional banks are still negative on the year. So 1 week of just in a thin market condition, Janet Yellen, and all of a sudden people now decide to buy bank stocks, which was interesting. We also had, when you compare with the XCI, which is the Computer Technology Index, year to date, that sector's up 13%. And then we also have the bank sector, the KBE, which represents the larger banks, but it was only up by 0.87. So it seems that the regional banks got a real big boost last week. The KRE, regional bank sector, got a real big boost. And, you know, to me, I look at the KCI, the insurers, as we talked about. We also look at the capital markets, you know, the Schwabs, the Janus, and the Ben Franklin Templeton. We look at those capital markets, and, you know, I'm still looking at those possibly peaking out this week. So I've got my eye on that. Doesn't mean we can't see some follow-through, but once again, we've got, even looking at this morning's trade, we have the Russell backing off the highs, and the 3 indices, the NASDAQ, the S&Ps, and the Dow, kind of pressing towards their intra-night or overnight highs. What are we going to do today, though? And that I'm going to talk about in just a second. But I wanted to get through some of these sectors because it's almost as if basically it seems institutions, everyone loves this technology and these semis. It's almost too much love, almost like the boat is leaning to one side. In the current quarter, repeat, just since the close of May 30th, I want you to pay attention to this. The XCI, Computer Technology, is up 9% since May 30th. So that's June, July, and 3 weeks into August. We are up 9% for one segment of the market, the XCI. The semiconductor is up 7%. Meanwhile, utilities, it's only up 0.5% in that same time frame. And industrials in that same time frame is only up less than 1%. Retail sector XRT in that same period is up 3%, and most of that happened last week. Now, let's take a look at the XRT and find out, when we looked at retail apparel, and we've pointed out about American Eagle Outfitters in August, I think it was August 4th, we had that in our observations sheet about looking at some of these retail apparel stocks. You look at Abercrombie & Fitch, Urban Outfitters. These are top names that we were posting several weeks ago. We look at the XRT and we go, wow, some of those stocks are up, like American Eagle Outfitters up 30% in like 3 weeks. I mean, it was a $10 stock, it's a $13 stock, that's a 30% move. When you look at the XRT, it's up only 3%, but let's look at the holdings. None of them show, except for Burlington Coat Factory, CarMax, First Family Dollar, FTD, GameStop. You know, when you look at some of these Shutterfly, PetMart, I mean, you look at some of these names, you go, wait a minute, where's the other stuff? Where's all the retail apparel? It's not in there. When we look at the consumer discretionary sector, the XLY, we got Comcast, Disney, Amazon, Home Depot. Yeah, there was the big whopper winner, that Home Depot. McDonald's, Time Warner, Ford, Priceline, Fox, and that 7 should have been a delete that and. It should have been an and Starbucks. Sorry about that typo. But so far, not a lot of these names really took off yet. So it was really the effect of retail apparel and Home Depot being the winner. I find it interesting that if the economy is robust, it's, yeah, the financials break out, I get that, but you also need to see some of the industrials, the materials, all these sectors need to kind of come into play. Anyway, when we look at Home Depot, and it's up only 5%, when we take a look back and see how that XLY has performed year to date, consumer discretionary is only up 4.47%. So I think here's my take. I think aggressive sector moves like the technology, because we only started to see positive performance from about August 7th. I think that you're getting really light volume. You're getting wider spreads in options. We've been talking about that for a couple weeks. You know, the funny thing, we did a little survey in this trading room the other day saying, you know, I was out in Denver, Chicago, in Florida, and I'm not seeing a lot of single-family home communities being built. I'm seeing a lot of apartment dwellings. We had a lot of people in the room confirm that. And then on Friday, what happened? New York Times posts a story saying the largest segment of building is multifamily apartment buildings because people are finding it harder and harder to get approved for a loan, so renters are coming in. I don't know. You know, I look at the facts and I go, so people are renting and buying technology and laptops, and they're sitting in their rental apartments. That's and you know, in an improved job market. Yeah, that's got to be good. So maybe people are buying low-end products, not the high-end. I don't, you know, that's kind of, it doesn't make sense. So when something doesn't make sense, stand back, wait, because I'm sure things will come in line. With the bond market up near its highs, with the knob spread widening, that's a kind of a scary situation in of itself, and we've got to analyze that. So I think if the banks are, you know, the banks are doing great because they get, what do they get? They get to borrow from the Fed at 0%, right? I mean, banks on an interbank basis, I mean, their Fed funds rate, their banks that loan to one another are darn near zero. You go and get a loan or a credit card from a bank, either you're paying a mortgage or you're refining or whatever you're doing. I mean, you know, even a credit card, you're paying maybe 20% or more on cards. So how much longer do banks need before they really start making money? Gee, I'd love to get 4% on my money again in a money market account. How many people agree with that? If I could just get a safe yield on a T-bill or, you know, a 2-year note for 4%, I'd be pretty happy with that, right? 4%, not 8, 4. We haven't seen that type of return on investment, and so everyone's kind of having to buy the stock market. So there will be a time where people will start looking at corporate debt as if the stock market is so safe, then why are we still buying treasuries, or why are treasuries still being bid up? That's a question I think we got to say is another warning sign. So more or less, you can trade the long side and be still nimble, and I think this week is trying to do that. You know, today's a UK bank holiday. It's a summer bank holiday, by the way. It's called the summer bank holiday, so UK has a day off. So again, just proof in the pudding. You have a lot of traders globally that are, you know, take the month of August off. I just can't wait to see what happens when everyone gets back here. We could see this market go up. I had a pivot number, believe it or not, at 2014. Can you imagine the S&P's hitting 2014 in 2014? I'm not sure how many numerologists are out there, but what are the odds of the market getting near 2014 in the year 2014? That would be pretty wild, right? You know, last week I said, hey, listen, man, we're only like, what, 20 points, 24 handles away from 2000. Like, they're not going to try to test 2000. Maybe they go a little bit above it, and we can be short-term biased to the upside here. It's just I want to start to, over time, price and time, start to establish some positions as we get and head into the October expiration, not September. So that's why I started to look at the NQ or the QQQ October puts, and we are trading near significant resistance in that area. So If lifetime Genesis users, you know that relative strength analysis spread page. You know, if you look, I just shared that with you guys. For those that don't have it, we just went from a daily oversold, overbought reading in the outer band, and then now the weekly started to cross the zero line on a strengthening index market. That is divergence right there. So I definitely wanted to point that out. This week is going to be kind of, you know, we've got very little in the term of heavy earnings, but we do have some earnings, and it's not going to be really heavy as far as economic reports, except for the one at Thursday, which is GDP. We have a few things that are setting up. We have silver at monthly targeted persons pivot support. Gold, watch for a bullish daily LCC above 1292. As I said Friday, I gave a big analysis on gold on Friday. I haven't changed my opinion on since Friday. So keep your eyes out on gold. And I'm still in my October 24-26 GLD spreads. Crude oil. We had a daily buy on Thursday with on-balance volume bullish convergence near quarterly support. You have a bullish last conditional change above 94.88, and that would be basis October contract. We also formed a little bit of bullish OBV on cattle, and the British pound, it could move a little bit lower. It's got huge support near 163.80. Keep your eyes peeled for that. Bullish stocks for the week. Here are the names that you can watch for that segment. These are for potential day and swing trades. So bearish stocks for the week. Here are some bearish stocks. What makes these bearish and what made these bullish? Well, if you punched up a daily chart, you'll note that these are some high closed dojis, and you'll note that these are some low closed dojis. Also, Apple, which everyone seems to think is just snazzy and they're going to do great with their iPhones. The funny thing is, just remember this, pre-split at 5:30 back in March, nobody liked it. There was a book out, it was negative, and people forget, let's count it up together. Middle of March to April to May to June, July, August. 5 little months, 20 weeks, not a lot of time has passed, and now everyone is getting very bullish on Apple. The iPhone 6 is going to be the best thing since sliced bread, but keep in mind the stock is trading over in pre-split times $700. It's not at $535 when everyone hated it. Now it's over $700 and everyone likes it. So, with that said, it might be important to keep your eyes peeled on Apple. We first have monthly resistance at 102.25, and then we have 108.74, which is a quarterly resistance, 108. So, I don't know if the market has the ability to climb to between 102 and 108, but boy, I would definitely check that out, because seasonally it does peak out typically this week on a longer term historic basis. The seasonality of Apple typically tends to peak in the last week of August, lasting into about the first week of October, specifically by October 4th. Okay? So I don't know if that's been because of previous releases or whatever, but I would watch Apple here on any further blow-off rally strength. I would be looking at that seriously for a candidate. And you can't do the September expiration. You'd have to go to October, even though it bottoms out. So you don't want to be in, we have to pick out the right strategy there. But I want to make mention, we do have bearish bias coming soon in Apple. So again, we have today Dallas Fed survey. We'll probably look at that. Dallas, Texas is a whole different country of GDP all in itself. They have oil. Their economy is booming, but how booming is it? We'll take a look at that by 10:30 this morning. PMI, Purchasers Managers Index at 945. We have that to contend with. For today, we also have, I mean, nothing big in terms of earnings today, but tomorrow morning, Movado, are they buying those watches? Best Buy, are they selling a lot of technology gifts for kids going back to school? ADI, Bob Evans, TiVo, Tube would be kind of interesting. And if you take a look at these names, you'll find out, you know, boy, there's not a huge amount of stocks, but we have Abercrombie and Fitch out Thursday morning, and we have Sears outlet stores on Thursday morning, and then Big Lots on Friday. And after that, Friday by 10:30 in the morning, I guarantee you it's going to be Ghost Town City, if it takes that long. We have Friday personal income spending, Chicago PMI, consumer sentiment, and boy, I'll tell you what, after those reports come out, it's going to be a tough, tough, long day because people are going to want to head for the door to get that 3.5-day holiday weekend in. So there's our sheet for the week, and I just wanted to go through a couple incidental reminders up in here. I definitely am, as this market gets more aggressive to the upside, and I'm looking at these AD analysis, breadth analysis. Boy, I'll tell you what, that was a real, I did not expect that. That I did not expect, because when I go over and I take a look at the AD lines and our AD line analysis, right? So let's go back to that page. A zero line cross on a weekly basis on the McClellan oscillator while the stock market is rallying. That's kind of a that's kind of interesting, because now let's take a look at the NYSE. So the NYSE is almost coming close to its AD lines near its highs, right? Price is not near its old highs, so that actually is a little more bullish than bearish, truthfully. And then when I take a look at the weekly, let's look at this together real quick. I look at the AD lines and I go, okay, this is, bear with me, I obviously was playing with my own charts. There it is. So the NYSE on a weekly basis, we're back again. You know, we have not made newer highs. There's the opening bell. We have not made newer highs, but friends, we have not made newer highs, but we haven't made newer highs. So then when we take a look at this and we examine it under a microscope, we go, oh, wow, yeah, so we haven't made newer highs yet. And we actually, on a closing basis, we're pretty close to that price. Volume has fallen off, so we want to be a little cautious in here. Now, that's suggesting that if we do break out and make a newer high and we get divergence on a weekly basis, and again, that's the end of the week, you know, that just means the market could stall. It doesn't mean we get long up in here. That's what that really means. So with that said, I also wanted to share something from TradeStation. Some of you were at the seminar at sea, and what we put together was a high close, low close doji with a trend definition, See, that's the hard thing. Everyone knows that the high close, low close doji is after an uptrend, you get a doji, you sell. After a downtrend, you get a high close doji, you buy. But to program what is an uptrend and what is a downtrend. And so basically, when you look at the intraday basis, it's, you know, are you taking all trades during, you know, 2 in the morning, 3 in the morning? Is it just open outcry session? These are things that we got to really program, but it's a nice little alert as to what happens. And so looking at this on a daily basis, I just thought I'd show people, is there a reason that we want to look for high close, low close dojis? I mean, what's the practical purpose that we look for LCDs? Is there any relevance to them? I mean, is it worth watching? I mean, is it worth taking the trades? And you know, that's the big question. So when you program, you know, under the rules, and the rules are, you know, after an uptrend. And now, so the next question is, where do you get out and take the profit? Well, we just did a little 1-to-1 risk-reward ratio based off the high close doji, no trailing of stops, and that would take a lot more programming. That would be more like a $50,000 system to put that out. In fact, that's what I'm doing. And probably if you guys can program this stuff yourself, you'll come up with your own trading system one day. We had Lamont in the at the seminar at sea, and he's taken my information and he's done it for himself. He's not an educator. He doesn't teach other people. He doesn't regurgitate the stuff. He did it for himself. And he found that the stuff that we teach is incredibly, it works very well for him, according to from his mouth to my ears. So with that said, there's a lot that can go into programming a trading system. And so as an indicator, though, or a strategy, it's kind of good. So I just wanted to go over just to share with you this stuff. I'm working on this a little bit. So the other week we had a high close doji and a 1-to-1 risk-reward ratio. Buy on the close of the next open or sell on the close. And if you note, sometimes the risk could be very tiny. And so if it's a 1-to-1, your reward's going to be tiny. So looking at this, you know, you get a low close doji and you get stopped out above the high of the doji. What's the high of the doji? 0.5%, 2 ticks, 4 ticks. You know, these are other little things we got to consider when we do a trading system program. But at the fact that you have the idea, how relevant is this? And I went with a daily chart. So again, note that the profit, you get cut off at your profit. If you could just learn, if we can learn as traders to let profits ride a bit, okay? Look at the low close doji that we had at the end of July, the high close doji at the beginning of August. So if it was an automated system, you just say, let it run, I don't care. What does the performance look like? Well, if we could maybe get a little bit more out of the sells and a little bit more out of the buy, the performance might be a lot better than what it is. So let's, if you're interested, I'll share with you the strategy performance report. Since 2012, that's the performance graph, okay? That's the performance. You can see there's not a huge drawdown. There was over in here. There's only 16 trades, both long and short, under those criterias. The system is profitable by $9,000. It's a 68% probability of profitability. So the high close, low close doji end of day with just those criterias. Now the funny thing is, based on those criterias, it misses a bunch of trades. A bunch of trades. It really does miss, you know, whether it was considered to be a low close doji, it missed it because the trend was up and it was a high close doji after a rally. It misses trades. It wasn't quite a doji, so it doesn't get you short when it should. Things like that. It gets you out maybe too soon. In some cases, you get out right almost perfectly. You know, so there are some considerations to be met. Here's a high close doji that was in February, which I do believe we bought and we were long back on that high close doji near support. So that's obviously a downtrend. So almost a very similar situation of what just happened between July and August. July, we had a low close doji, and the system with the 1-to-1 got out too soon. Can you imagine what the profitability was instead of getting out here, trailing a stop and getting out to the next signal, which would have been over here? So instead of getting out at approximately, you know, 17.95, you got out maybe at like 17.50. So that's an extra 42,000 bucks. So just that one trade right here, add 2,000 more profitability to that trade. How about this one, high close doji? If you were able to trail that a little bit to the next system or a sell signal, that got you out at about 1775 or 1780, and then, you know, the market rallies up to around 1850. So that's another 70 handles, another $3,500 of profit. So letting things ride a little bit might be more impressive. Here's another one last October. Get you in here and, you know, maybe cut it out a little bit too early, left some money on the table. As you can see, here's one, because it was a high close doji, it doesn't even take the trade because of the definition of what was a downtrend. Here's a low close doji, it didn't take the trade because the definition of what was the uptrend. So we have to refine the system. So like I said, it misses a few really good trades. That was a high close doji after a downtrend. This was a low close doji because it was after an uptrend. So we need to define what's the uptrend, what's the downtrend. So in any event, I thought you'd be kind of happy that from just a very simple program, if we can, as we'll work on, and I'll work on this, it is something that we've got to define what uptrends are, what downtrends are, holding periods. There's a lot of work that goes in it. And then you got to do strategy performance. But the fact is, the system, the high closed doji, low closed doji, again, it's interesting to look at this. The long trades didn't do as well as the short trades in the system, but the losses on both the longs and the short were about the same. So in any event, I think that the holding period needs to be a little bit better. That's the key. But this percent of profitability, when it does work, is amazing. It's just, I think it's another great way of proving that sometimes you got to let the profits ride. If you have a defined risk and you're able to scale out or at least trail your stops and let those profits ride, that's where, but if you can have just a very simple trading system and then work around the other parameters, it's something that will enhance your trading performance. Obviously, you're not going to get a high close, low close every single day or every single week or something like that, but it's definitely worth paying attention to because it picks up trades that other people would not have picked up. Anyway, I wanted to share that with the community today as well for those that were not on the cruise, and I'm working on that as a trading system. But as an indicator, obviously the high closed, low closed doji is pretty dynamic, and so when we have the crude oil, by the way, I'll share that with you in just a few minutes. Intraday crude oil is like 80%. It was off the chart. It was literally off the chart. So crude oil respects this trading methodology on an intraday basis as well. And I know we're now into 9 minutes into the session. So I leave these high close, low close doji alerts up for people so that you can see them in the trade room. We've created them in Genesis. And so just so that you know, it is something that is a viable trade signal to utilize. But it's nice to see it, on a back testable. I'm sure you can, as we can say, okay, when does it not work? When does it work? We can look at all that type of stuff that's really, instrumental in identifying trades. So with that said, let me review and also go into real quickly today's areas of interest for us. And we'll conclude. So that, for our day trade setups, that concludes our little outlook for the week. You guys have your weekly sheets. And so now let's get into what we talked a little bit about on Friday and then follow through with